Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, September 25, 2012. Well, a change of trend back to the upside today in a candle that's made a higher high and higher low, but a trading day where the sellers closed with controls. So we have that conflict there where the buyers were strong enough to take out the previous high, the sellers weren't strong enough to take out the previous low, but they did close down towards the low of the trading day for today. And we see this large shadow on the top where where the buyers lost commitment up above the 1767 level and tested up to this level of resistance around 1780 that's been tested on quite a few occasions now in 1780 and beyond. So that's a very, very important level area to this market. We have closed down below the 1767 level, as I've mentioned, but we do have very strong support down at 1755, and that has been a very important level. So basically we have the market trading within some sort of a congestion area. It's very hard to define what type of pattern this is. It doesn't easily fit a lot of the patterns that we like to look at, but the important thing here is that the market's congesting, but we've actually got the market making higher troughs and higher peaks within this pattern, and that by itself does suggest that the buyers still remain quite strong in this market. And if we look at all of this trading action that we've had over the previous month or two, we can see that the market has been moving very, very efficiently to the upside with very few congestion areas and very good, strong uptrending action. And it really does say something about, in big picture terms, the strength of the buyers in this market. Having said that, however, if we do trade in a bearish way down below 1755, we could quickly see the market trading down to this highlighted area in yellow, down to around the 1728 to 1706 level, and even down to 1700 the round number support. But if we do see a breakout up to the upside, the market could very easily trade up to 1800, but that will be a major barrier for the market, the round number up around there. But we don't have very well defined areas of boundaries of this area of congestion. So a bullish close up above perhaps the 1780 level would go some way to convincing that the buyers have taken control once again. But we do have this spike here where we have this downside price rejection from around the 1790 level. So 1790 could hold as an area of major resistance as well. But the area of support down below this lower boundary here around 1755 is much better defined, and a bearish breakout down below there could see the market trading quickly down to the yellow shaded area, as I've mentioned. In terms of Ichimoku, nothing really major here to examine because we had very frequent changes of trends. But just looking at this uptrend that the market's in, it did test exactly to the 61.8% level and was rejected from there. So that's significant for this market. And it does suggest that there is potential for the trend to change back to the downside. So the 1755 level of support down around here does become very important. And also with the Fibonacci retracement, we can see that the market has been rejected from the 61.8% level in a bearish way, and that also suggests that there is potential for a change of trend back to the downside. Now looking at Ichimoku, we do have a bullish market in the long-term time frame by trading above the cloud. That is looking a little bit overextended. We are trading a long way away from the cloud, but as the market continues trading, if we do see more congestion, then the cloud will come up to meet the market, so that's significant. So the cloud is it represents basically equilibrium in the longer term time frames, and markets move from trending to equilibrium states, and here it's quite surprising that we haven't seen the market stretch or bounce back towards the equilibrium represented by the cloud in the long-term time frame, and I think it does say something about the strength of the buyers in this market overall. Looking at the Kijun-sen, the market's trading above the Kijun-sen, so it's bullish in the medium-term time frame. We are trading a fair way above there. It's been quite some time since we've been trading below there, so that's significant. There is possibility the market could be attracted back towards the equilibrium in the medium-term time frame. But looking at the Tenkan-sen, the green line. The candle we're analysing here obviously is this second last candle. The final candle hasn't finished trading, but the market is still just trading above the Tenkan-sen, so technically just bullish, but so close to it that the market is basically neutral. So if we do see a bearish breakout down below that Tenkan-sen, that could be significant. As for the Tenkan-sen, again, also it's been quite some time since the market's been trading below there, so that will be a good guide as to some sort of change, especially in the short-term dynamics in the market. So basically, moving forward, very strong support down below at 1755. There is potential for a breakout below, but decent resistance overhead with quite a few levels at 1780, 1790, and then up to 1800.